Hi, and welcome to this edition of Financial Victory in Minutes. This is part 3 of a 3-video set about rebuilding your credit. In this video, we'll take a deeper look at reestablishing good credit. And as someone that's worked with folks rebuilding credit for many years, I'll give you some specific tips. As we saw, information from your credit report is used to calculate your credit score. And although lenders use different things, our credit score is the most important single factor they use to decide whether to give you a loan and how much to charge in interest and other fees. A question I hear all the time is, do I have to have debts to have a credit report? Unfortunately, with the traditional CRAs, the answer is usually yes. In order to have a traditional credit score and something other than a blank or non-existent credit report, you must have active credit accounts. Credit reporting is purely voluntary. Lenders and CRAs are not required to report all of your payment activity. They're merely prohibited from reporting false information. An example of this is that the 3 traditional credit reporting agencies, or CRAs, usually don't report your on-time payments for things like rent and utilities. But there's an alternative credit reporting agency called PRBC, or Payment Reporting Builds Credit. PRBC is an alternative credit reporting agency that can be used to build credit based on payments for things like rent, utilities, child support, and daycare that are not usually reported to the regular credit bureaus. In order to build credit with PRBC, you must use one of their 4 online bill pay partners: William Paid, Account Now, Rush Card, or Vision Prepaid. Within each of these 4 services, be sure to select the option that builds credit with PRBC. There is a small monthly fee for this service, but the fee isn't as much as you pay in interest for a loan each month. Although PRBC is not widely used by lenders, you can ask your lender to request your report from them. Another option is that FICO has what's called a FICO expansion score that includes non-traditional forms of credit that aren't usually reported. Again, you may want to ask your lender whether they'll obtain and consider this option. Something to keep in mind is that all credit is not considered equal. For the purpose of your credit score, some credit's more valuable than others. Real estate loans, mortgages, vehicle loans, or unsecured loans are all considered very good forms of credit. On the other hand, a high-interest loan from a finance company, a store charge account, or a collection account may actually have a negative impact on your credit score. Having more than one type of credit will increase your credit score more quickly. Installment loans include student loans, automobile loans, or signature loans. Revolving credit includes credit cards or home equity lines of credit. Another tip is to think local. Be a big fish in a little pond rather than a little fish in a big pond. If you're not a member of a credit union, see if you can join one. You can develop a relationship with a local credit union or a small local bank, getting to know the credit union or bank employees, and building a track record by keeping your accounts in good standing. If you have a relationship with a financial institution, you can explain your situation to a personal banking representative. Honestly tell the banker why or how you got into financial trouble or why you had to file a bankruptcy. Explain why your finances are stable now and how you want to rebuild your credit worthiness. Then, ask if the credit union or bank will consider making you a small, unsecured loan. For example, $2,000 for 1 year. Offer to put the full $2,000 loan proceeds into a savings account with that same credit union or bank, and simply use this account to make your monthly payments on time until the loan is paid, so long as the credit union or bank will report your payments to the credit reporting agencies. You'll still have to pay the extra interest from your own pocket, but if you don't spend any of the loan proceeds, the interest you pay will be a small price to establish an excellent line of credit on your credit report. Credit cards are the most common way people get into financial trouble. If you've already had money problems, of course you don't want to get in debt again. The correct way to use credit cards is only for the convenience of not having to carry cash and to get rewards. This means that you pay off your balance in full on time every single month. In other words, never charge something that you don't have the money to pay for. Be honest with yourself. Credit cards are not for everyone. If you don't trust yourself to use a credit card in this way, it's best not to have any. But be aware that most debit cards do carry higher risks if they're lost or stolen. Most people who have filed bankruptcy get many credit card offers mailed to them immediately after their bankruptcy. But these credit cards often carry high interest rates or fine print with unpleasant terms. But so long as you pay your bills on time, in full each month, those things won't matter. When obtaining a credit card, you may wish to avoid companies whose policy is not to report your credit limit, but to use your most recent balance instead. Capital One and American Express are among the companies that have done this. If you trust yourself to use credit cards properly, then doing so and making on-time payments without using too much of your available balance is one way to build good credit on your credit report. Also, some people find it helpful to use a credit card only for a particular expense category, like food or gasoline, to help them track their spending in that category. If you can't get a regular credit card, then you may wish to get what's called a secured credit card. This is a credit card from a bank where you deposit a sum with the bank to secure or guarantee the amount of credit that the bank will give you on the card. Since there's no risk to the bank won't care about any prior credit problems. The credit limits on secured cards are usually low, about $200 to $500. With on-time payments, the institution will often raise your credit limit without asking for a larger deposit. But there are some things to look out for with secured credit cards. With secured credit cards, be sure you read all the terms and understand them, because some secured credit card offers can be misleading. Some things to watch out for are secured cards that charge you fees immediately for membership or other required items that sometimes add up to more than half your limit on the card, or secured cards that limit your purchases only to items from a certain catalog. Be careful. Now, sometimes part of rebuilding your finances after a period of financial trouble can include finding another place to live. Here are a few realistic, practical tips. When trying to rent after bankruptcy, be persistent and proactive. If you tell people your situation up front, they'll often give you a chance. If a bankruptcy relieved you of your debts to the point where you are well able to afford the rent payments, you should be a good risk to a landlord. Explain this to them and, if you can, offer 2 instead of 1 month's security deposit to make the landlord feel more secure. Another question I hear a lot as a bankruptcy lawyer is, how soon can I get a house and a mortgage? Well, this is a common goal and a good one, but it's also the biggest, most important purchase most people ever make, so don't rush it. This is a very common mistake that folks make. If apartment living isn't for you, first look for a house, condo, or townhome to rent. Especially nowadays, you can often find a great deal that's for rent by an owner. From my years of bankruptcy experience, and also as a certified housing counselor, I want to share some tips with you. Most people have heard that paying rent is like throwing away their money. Well, that's not always true. The idea behind home ownership is to build paid-for value or equity in your home over time while taking advantage of the tax deductions for mortgage interest. But if you don't have the money to adequately cover all the costs of owning a home, you can lose all the benefits very quickly and get into financial trouble again. Don't rush this purchase. Can you get a mortgage within a year or less of bankruptcy? Probably yes, but usually with terrible terms that may cause you financial heartache in the future. Those high-interest mortgage pushers will tell you, oh, no problem. You can refinance before the high rates kick in. But today's economy can make that impossible. And each time you get a loan, you're paying plenty of loan costs, although they may be hidden. The better choice is to wait to get a home when you can make a down payment and qualify for a low-interest, fixed-rate, standard mortgage. The difference between rushing it and waiting may not only be hundreds of dollars a month, but many thousands of dollars over the course of the loan. Hybrid mortgage products can lead to disaster. Sorry, I think I just got into a rant there, but I really worry about the predatory mortgage environment out there. Be sure you realize all the costs of home ownership before you buy. Many people don't. It's not just the principal and interest on the mortgage, but the money for real estate taxes, required homeowners insurance, and maintenance of the home. In fact, the amount you should be able to save for home maintenance is between 1% and 3% of your total mortgage amount. For a mortgage of $150,000, that would mean having an extra $1,500 to $4,500 per year for maintenance. If you absolutely must get a mortgage quickly after bankruptcy, look for a fixed-rate mortgage with no prepayment penalties and no odd terms. Then you can try to refinance in a few years when you've rebuilt your credit more. A certified housing counselor can be a big help. Trained housing counselors are on your side, help you to understand your choices, and work with you on a realistic budget. If your credit is damaged, a cosigner can help you get credit or get better terms on credit. But you should know that a cosigner is putting his or her credit and finances on the line for you. On the other hand, merely being an authorized user on someone else's account doesn't really help your credit. There you have it. Those are my tips for rebuilding your credit. Here are the most important things to remember. Know that no matter what happened in the past, you can build good credit. Think hard about why credit is important to you and how it can help or hinder you in reaching your financial goals. Don't have credit because it's the thing to do. Know why credit is important to you. And limit your use of credit to things that'll fit into your balanced spending plan, things that you need and can't wait to save for, and that help you to achieve your long-term financial goals. You're on your way to good credit. Please use it wisely.